What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see more sector rotation, so you need to pay very close attention to the price action in the indices. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so looking at SPY, we can see the price action did go up 0.25% today, and we did get another price action close above a positive sloping 5 EMA, and we still have this very strong bull trend. Now, I'll be honest with you, I do not like this candle that we see today, and a lot of people will probably have a name for this candle, but I'll just go ahead and name it I do not like you candle. These candlesticks are typically a reversal sign because they signal a price action close exactly where we opened, and I don't like to see that. We saw the same exact thing yesterday with the doji candle where we closed exactly where we opened, and we do have a wick to the downside. Typically, this is a bullish candle because it means people were buying the dip, and that's why we see a wick to the downside, but I don't like seeing a bullish candle like this at an all-time high. So SPY did close at a brand new all-time high today, and we are getting very close to that next price target at 446, and we're starting to see this very anemic market just going nowhere and closing exactly where it opens, which doesn't show any conviction with the buyers. So I want you to continue to be cautious in this bull market, and I don't want you to try to call a top, and I never suggest trying to call a top, but this is definitely the time to be more cautious because we are in those volatile months of August and September, and I've already warned you that typically these are very volatile, and bank trade alerts data already says there's typically a lot of trade alerts during this session, meaning there will be volatility. So be cautious at these levels, and the next price target is still up here at 446. And from today's close, that's less than 0.5% before we're there. So be cautious and understand the risk as we get to the next price target because we have met all of the requirements to get a significant pullback and possibly even a stock market correction. Now, as long as we have the bull trend and we're above critical support, I don't want you to sound the panic alarm and I don't want to scare you out of your positions. So stay the course and stay objective. On SPY, you still have critical support at 441 and the 20 simple moving average is just above 438. 438 is going to be that make or break level that if we do close below it will mean the market is rolling over. So below 438, I want you to be a lot more cautious because we could be coming back down to 432 or possibly even lower. On the NASDAQ 100 triple Qs, we did see more sector rotation with the tech sector getting sold off in favor of the financials and industrials. We see the triple Qs going down 0.17%, and intraday we did test that critical support level just above 364. So we're testing critical support, and we do have a price action close below the 5 EMA for the second day in a row, which again, I want to heed caution signs that this could be an early warning sign that the market wants to roll over. Again, to be objective, you need to wait for that price action close below about 364.7, and that will signal a breakdown in critical support, and it does mean we'll likely lose the bull trend, which increases the chances we could go through a stock market correction. We're seeing the second day in a row of increased volume, even though it is still relatively low volume on a red day in the triple Q, so pay close attention to that. To the upside, you now have resistance at 367, and we still do have that price target at 370. If we break below critical support, look out below because we could be coming all the way back down to the 50 EMA around 356. We do have support around 362.7, 360, and 358, so watch those levels as well. Remember, for the time being, we still do have a bull trend and we're still above critical support, so still remain bullish, but just please be cautious at these levels. On the Dow Jones, we continue to see where that sector rotation money is going, with the Dow Jones going up 0.63% today after gapping up. We do have our next resistance level just above at 355, and above that we could run to 359. Again, the Dow Jones is getting a lot of that money because we're seeing money going into the financials and industrials. The gap fill below will be support at 353, but the most critical support level is still 351 and our 20 simple moving average at 350. If we break below the 20 simple moving average, again, we're likely rolling over and we could retest critical support at 348 and the 50 EMA just above 346. On the Russell 2000, we were up about 0.5% today and we did close back above the 50 EMA. The Russell 2000 has been battling around the 50 EMA to try to scare away the bears, and today we finally did get a bullish price action close. Again, this is a pretty ugly candle because I don't like seeing these giant wicks to the downside while we're closing at daily highs, and that's exactly what we see in the Russell 2000 and the SPY. It doesn't mean we can't go higher, just be cautious and watch that critical support level at 222. If we break that, look for support at 220 and 219, and below 219 we're likely coming back down to 215. To the upside, we could have a quick trip to 227 if this is the real deal breakout, so watch for that price action going into tomorrow. If we break above 227, we'll likely retest all-time highs, and we could retest the possibility of a bullish breakout. On the Arkk ETF, we were down 0.12% today, and we do see Arkk struggling to stay alive. It's at that critical support level of 121, and we're about to lose the bullish trend if we have one more red day. So watch for a critical bounce off of that critical support at 121 to try to break back above 123, and we still do have resistance at 125.5 and 128. If we break below 121, look for critical support at 120, and below that we're likely coming back down to 115. Today on the VIX, we see it getting crushed, going down over 4.3%, which is exactly what we want to see as we close at brand new all-time highs. So the VIX is confirming the bullish breakout in the SPY, closing at brand new all-time highs, and we are seeing the VIX getting very close to coming back down to those low levels in the low 15s. Remember, the lower the VIX goes, that means there's less fear and less volatility. So it's going to go hand in hand with this very boring, slow grind, low volume melt up market that we're currently finding ourselves in. So watch the VIX, because the lower it goes, even though we are biased to the upside, it will be on low volume and low volatility, and it will be a very boring market. That's not a market you want to be an options trader in, because it will drain your premiums and you will lose a lot of money to theta decay. So if we see the VIX spiking back above 18.2, that will be a lot more volatility, and we'll know we're due for a stock market correction if we see the VIX spiking above 20 and breaking out above about 23. On Bitcoin, we're currently up just over 1%, and we're seeing Bitcoin holding over that support level just above 45,000. Remember, my price target is up here at 51,000, and we could find significant resistance at that level. I still think Bitcoin is going to brand new all-time highs this year, so don't just think because Bitcoin gets to 50,000 that you need to sell it all. I think that will be significant resistance and a great time to take some profits, but overall we still have a strong bull trend and we have a ton of resistance below. Watch the critical support right around 43,000 if we break below 45,000, and the strongest support level will be right around 41,000. Overall, Bitcoin is looking bullish since we got off of that critical support at 30,000, and it could be on its way to brand new all-time highs. So buckle up and enjoy the ride, and make sure you're staying a Bitcoin bull as long as we have the strong bull trend. On Amazon stock, we were down 0.86% today, and we did see Amazon breaking through a critical support level at 33.11. The good news is the next support level at 32.80 did hold up as support, but the bad news is we're breaking down through support levels. If Amazon does break down through 32.80, look for the next support level at 32.08. To the upside, you now have more resistance we need to break through at 33.11, the support trend line right around 33.65, and we still have resistance at 3,400 and the 50 EMA at 3,450. So there is a ton of resistance above, and against all odds, Amazon continues to go lower. So this is definitely still a falling knife scenario as we blast through support levels, so be cautious. But overall, I do think Amazon is good to accumulate at these levels because we know gaps typically do get filled, so we should expect to see Amazon returning to 35.80. It's just a matter of how long it's going to take. So use this gap as a bias in the long term, because this could mean if you're an Amazon bull, you could accumulate at these low levels down here at support, knowing this gap is very likely going to get filled. However, if you're a trader, be cautious because we don't have any bullish momentum, and it's still possible we could be coming back down to 32.08. On Tesla stock, we were down 0.31% today, and we still see Tesla consolidating just above the 5 EMA, and we still have the very strong bull trend. Tesla's Bollinger Bands are continuing to expand, which is allowing us to see more volatility in the near future. Remember, Tesla needs a break above 715 to run to our next price target at 765, and we need to see a price action break down below 692 to retest our critical support right around 678. Remember, if Tesla breaks below 678, it's likely going lower, and if we break out above 715, look for that price target at 765. We still have the bull trend, so maintain the bull bias in Tesla stock, and after a consolidation, we will typically see a very powerful move. So look for the breakout above 715 if you're a bull, or the breakdown below 692 if you're looking to be a Tesla bear. On Apple stock, we continue to consolidate in this wedge, and we still see Apple holding up above support at 145 and below resistance at 148. Remember, Apple could go either direction, and it will be a very powerful move, so look for a breakout above 149 to send us to our next price target at 156, or a breakdown below 143 to send us to the 50 EMA at 140 or the gap close at 137. Apple stock can go either way, and we did lose the bullish trend, so you can no longer use the bull bias. So you need to watch for a confirmation breakout of resistance or a breakdown of support. On the financial sector, we were up 1.15% and we continue to see that sector rotation. Money is without a doubt flowing in the financials and we do have the full bull trend. We do have a significant gap below that might get filled, which would be a much better buying opportunity, but you can't look at the financials and see anything other than a very bullish sector. On the industrial sector, we're up 1.3%, and again, we're looking very bullish, and we can definitely see money flowing to industrials. We're well above a positive sloping 5 EMA, and we still have the full bull trend. The healthcare sector took a beating today, going down 1% and closing below the 5 and the 13 EMA. Price action still above a positive sloping 20 simple moving average, and we still have the full bull trend. The energy sector was up 0.79% today, and we're back above 3 of our 4 moving averages for the second day in a row. It's very possible the energy sector is doing exactly what the financial sector just did, and it's turning this corner and getting ready to go back into a bull market. Look for that break of the 50 EMA and the regaining of the full bull trend. So jumping back over to the S&P 500, we can definitely see a lot of sector strength in the financials and industrials, and even the energy sector is coming along for the ride. The question is, are we going to see more selling in the tech sector in favor of the reflationary sectors like industrials and financials? Watch the price action closely and remember to remain cautious in August and September. These are typically very volatile months and we could see a lot more sector rotation. Watch that critical resistance at 446 and wait for a critical support breakdown before you think this market's rolling over. The market is still bullish until it's not, and right now this market is still bullish, so you need to remain a bull in a bull market. Also, don't forget that I have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and it does very well in all market conditions, but exceptionally well in volatile markets. August and September are typically very volatile, so now could be the best time to try BANC Trade Alerts. I'm running a 50% off coupon code for your first month, so you can find out all of the details on how you can become a member of BANC Trade Alerts in the description below. I also have the Stock Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join in the description below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.